Right, traders, welcome back to the Price Action Labs YouTube. Here we're going to be going over one of the most powerful concepts and something that I've been getting questions about, which is about how do you incorporate footprint charts with ICT concepts and how do you determine which fair value gaps are going to be respected. The best way to do this is by utilizing the ATAS platform, which is something we're going to be going over in a lot of detail in this video. So this is the ATAS platform now on your screen. So again, we're going to be going over a very quick kind of breakdown as to what this actually means. So this looks like a lot of numbers and it shouldn't confuse you because we're going to really break this down. Let's take this candle over here, this green candle we see in front of us, right? Just over here. Now the footprint chart essentially gives us some data we need to work on. Yes, it gives us our body. We have a green body. We have a small wick up here, small wick up here as well, right? So understanding the footprint chart gives us a lot of extra insight when it comes to understanding who is aggressive, who is passive, and where the most volume is being traded. Okay, so I've made a previous video on this, right? So we're just going to quickly recap what we mean by the delta, ask, bid, and the volume. Okay, so we have a number on the left and we have a number on the right. So in this case, we're dealing with 0 and 120. So the number on the left represents the bid and the number on the right represents the ask. And what you need to take away from this, the key things you should take away from this and the key things you need to know is you need to understand that the left number, the bid, represents all of the market participants who are going in with aggressive sell orders, right? They're going in with market orders and they're going in as aggressive sellers. So they want to drive price down, right? They want to drive price down. Now, of course, the right number represents the ask, which is the opposite. So these are market participants who are aggressively looking to buy and hence drive price higher. And so what we can see over here, if we just consider, the last candle before, if we consider this candle, right? What we're seeing over here is we're seeing blue delta and red delta. Again, quite self-explanatory. Blue delta represents positive delta. So this means that there's more aggressive buyers than there are aggressive sellers for that particular price point. Now, what I don't want people to get confused with is that there's more buyers and sellers at a specific level. No, that is not correct. There are more aggressive buyers than there are aggressive sellers at that particular price point. So this is ES at 55.06 roughly. And so this is telling us that we have a lot of aggressive buy orders coming into this kind of region. Same over here, we have blue delta over here. Even though the volume has dried out, we see 0 for 32. Here we see 0 for 18. And even here we see 0 for 104. So what this represents is that there's more aggressive buy orders than there are sell orders, right? So if we go back to our original candle, we see that there's more aggressive buying than there is aggressive selling. Now, despite that, the market moved down, and we're going to go into this as to why the market moved down and how you can use footprint charts to your advantage. So the first thing is understanding the bid and the ask. The second thing is understanding the delta, understanding that there's red delta and blue delta. The last thing we need to go over is the volume. So the volume over here is kind of the right hand side of every single candle. This here is volume. This here is volume, right? So if we understand volume at its very basic nature, what we're looking to understand, right, is in this case we have 0 and 120. So the volume is 120. So quite simply, it is essentially the bid and the ask added together. Okay, so volume essentially tells us where there's most activity. Where are there buyers and sellers? Where's most of the transactions happening between aggressive buyers and sellers, right? What we end up seeing here for this particular move, right, we're going to break this down on the candlestick chart as well, is that we see a decrease of volume coming into this area. So we see a decrease in volume, we see a decrease in volume. This kind of red candle over here, we had a massive sell-off today on the S&P 500. The volume here decreased, right? So as a trader, when you see a decrease in volume, that means that there's a lot less aggressive sellers and buyers. There's a lot less aggressive participants trading at that price. So this represents a lack of interest for that price. And that's what leads to large drops and large rallies. So now if we head back to the candlestick chart, which we're all familiar with, this is SPY. Now, pre-session, what I like to do is I like to have my supply and demand zones kind of marked out. So we had a supply zone from here. Again, it left an inefficiency and broke some structure over here. So this is our supply zone, right? So again, price was kind of bouncing into this supply zone and this supply zone ultimately held. We had a demand zone down here. And one thing I like doing as a trader is my pre-session game plan, my pre-session market. So from about 9 to 9:30 Eastern Standard Time, I am looking at creating game plans, understanding where there's supply, understanding where there's demand. Quite simply for me, when I want to see a supply zone or a demand zone, I'm looking for fair value gaps. I'm looking for an inefficiency over here, and this supply zone held from the previous day, and I'm looking for an inefficiency over here. Now, the next thing we understand from our ICT concepts is I always like to look at the previous day high, right? So the previous day high again was here. This was Tuesday, which gave us our previous day high, right? So if I continue to play price on, this is the 15-minute time frame. We see how price reacts off this demand zone, right? But this is now CPI. So this is before the session, right? This is an hour before the session. We see this demand holding, right? Demand held. Now, as price comes into our session, right? This is now kind of 15 minutes before. And of course, we had the massive sell-off on market open, right? We're going to be going over how you could have broke this down using order flow. But just from an ICT or price action perspective, what we understand over here is that the previous day high was not broken but swept. So this is a massive indication for looking for reversals, right? So we've come into a supply zone. That's the first thing. So let's label our thought process as a trader, right? When it comes to understanding this, right? So the first thing we need to understand is that we've swept a previous day high. The second thing is that we've come into a supply area. And the third thing is we have a lot of selling volume upon open. And we're going to be dissecting this in detail when we go into the footprint charts, right? So if I were to open up now the footprint charts, what we're effectively seeing on the footprint charts is we're seeing the same movement, right? We're seeing that same movement on the 5-minute time frame. Price came into our supply zone, which I showed you on the candlestick chart, right? So this kind of supply zone over here on the 5-minute chart, this same supply zone, we're going to be analyzing it from an order flow perspective. Now, from an order flow perspective, we see the same candles, but we can really dive into them and see what we end up getting. Okay, so for those who were paying attention earlier, what we saw over here is we saw a lot of blue delta. So we see a lot of aggressive buying. We see a lot of aggressive buying. And we see a lot of aggressive buying. Now, upon market open, right, this was the market open down here. We saw the volume shift, right? So we saw a decrease in volume up here. And we saw some volume down over here. So the first thing you need to understand as a trader is when you see aggressive buy orders that are hitting the ask and they're not being rewarded, what this shows us over here is that this supply zone is strong. So what you want to understand, if I bring this over here, what was going on in this region essentially from understanding the footprint chart was price was coming into this area before it sold off out of this area. And in this entire region over here, we had aggressive buy orders, right? So we had that positive delta. When we see a positive delta or a blue delta, what this indicates to us is that we see a lot of aggressive buyers that are not being rewarded. This is what we call absorption, right? So if we just read this one by one, if we understand the order flow and we read it coming in, again, our candle we started with, we see 0 for 120. So we see a 120 market participants who are aggressively buying, and there's no aggressive sellers. So when there's no aggressive sellers and only aggressive buyers, and the market manages to have a huge sell-off the way it did, what this shows us is that there are passive sellers sitting in this region. So when we see a positive delta, what we're essentially looking for, or what this tells us, is that when those aggressive buy orders are not being rewarded, that shows us that there's passive sellers sitting in this supply area, right? And this is what gives us a lot of confirmation to look for sells from. So once we've had that in place, right, we now come down to our demand zone, right? The same demand zone that I marked out earlier, right? The CPI demand zone, right? So if I bring that up again, we had our, sorry about this, we had a CPI demand zone down here, right? So if I were to mark this over here for people to understand, here's our fair value gap, right? So this is our inefficiency. And so this is where essentially the trade was taken from, right? So we understand that we have, what we are looking for here is a demand area and a fair value gap area, right? So this is an area that price has come into, and we are looking to enter short off this area, of this region, right? So when we come into a demand zone, there's two things that can happen. Either we can see price kind of bounce off and we can see kind of aggressive sellers be absorbed, or in this case, we saw price head downwards. But how do you know? And this comes from essentially reading the order flow, right? So now as price comes in, to this level, what we see over here is we see kind of a lot of low volume up here. So this low volume here indicates a lack of interest for these higher prices at that particular time. That's important to understand. Now, as we come into this area, one thing I find fascinating is that as we came into here, we had a lot of blue delta. Now, when we see blue delta, the blue delta is positive delta. So these are aggressive buyers that are trying to drive price up. But did they succeed? Right? Did those aggressive buyers succeed? Well, they didn't, right? Because this zone got broken, right? We see how price at around, I believe this was before 10 a.m. Eastern time, price came and really broke through this zone, right? One thing I should bring to people's attention as well is look at all this blue delta over here, right? So this is the blue delta. So this is a wick. So when we break down this candle, we see the body is over here and this is the wick. So the candlestick alone will not give you information about what's going on with the wick. Okay, so the wick essentially shows us that we have a lot of blue delta. In fact, if you read the order flow, we have 0 for 188, right? We have 0 for 279. So we see a lot of aggressive buyers in that wick. But were those aggressive buyers successful? No, those aggressive buyers were not successful. And this is what shows us that this is now a demand zone that's flipped to a supply zone. So this is a supply to demand flip zone, or in this case, a demand to supply flip zone. Again, we see in this zone, we see a lot of blue delta coming in. We see 8 for 48. So what that means is that there's effectively 5 times more aggressive buyers than there are aggressive sellers. So for every one aggressive seller, there's 5 aggressive buyers. And despite their buying, strength and their buying kind of efforts, they were not being rewarded. So when you see aggressive buyers that are not being rewarded and price heads downwards, this is a very strong indication that you should be looking for buys, because there are passive sellers that are kind of absorbing those aggressive buy orders, right? Again, we see the volume from here decrease. Look at how low the volume is over here. A low volume represents lack of interest for those specific prices. So now if I head up back to the candlestick chart, right, what we understood over here is we saw how price kind of came through. Here we saw a very clear representation of how aggressive buyers were being absorbed. So this is essentially the thesis for the short trade. So you could have taken a short from here, stop loss above the zone, and again, you're targeting at least a 2-to-1 risk to reward minimum, right? 2 to 2.5 is a healthy RR, right? So again, it was a pretty quick trade that went down from about 10 a.m. Eastern to 10:15. Really good trade opportunity, really good scalp you could have taken. And the main thing I want people to understand is understanding how you could have used volume, delta, and order flow to confirm your position, right? Understanding the aggressive buy orders are not being rewarded from this particular region. So that's what gives you kind of your insights to ICT and order flow, how you can combine the two to see successful results in your trading. So if you like this video, give it a like, give it a thumbs up, and I look forward to seeing all of you in the next one.